In this video, learn the surprising secret to finding the most lucrative trades. Hi, I'm Mike Bellafiore, co-founder of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In this video, I implore a junior trader to focus on what is essential for him, to find the trades best for him, for his trading business, using his biggest strengths to excel in his trading career. Let's get to work on sharing these important trading lessons so you can grow your trading account.
Today I'm going to be talking about a trade from Monday in Apple that's a relative strength play that has an incoming catalyst. So the market big picture going into this trade is that we're still in the coronavirus era of this market, but there are multiple promising vaccines in the late stages of their trials. The economy is opening up around the world, and the election, which is only 3 weeks away, is a volatility event that most investors are waiting for. And fears of a second wave are growing because it is flu season, but vaccine data is muting most of these fears. If we look on the daily chart for the S&P 500, we can see this is where we bottomed in March, and now going into this trade, into this weekend, we are on our way back up towards all-time highs once again after a pretty steep pull-in in September. And that's important for this trade because it's long Apple and they are an incredibly correlated market stock. So intraday fundamentals. The market was gapping up pre-market, tech names especially, which had been notably weak for the last month. Apple had been beaten down pretty hard, but has shown relative strength in the last week. And tomorrow is their iPhone conference day. At this point, obviously, we haven't seen the conference, but people are already calling it the event of the decade for Apple. Whether or not you agree that that is what happened, we don't know that going into this trade because it takes place the following day. So here's Apple on the daily going into this trade. We see this massive run up into their stock split, and then right after the day of the split, they pull in 26% post-split and then consolidate at these lows. In the last week, they've been consolidating above those lows and have shown relative strength to other FANG names that are highly correlated with the market. Now we're gapping up above this consolidation range, and this is a candidate for some real follow-through, especially with the incoming catalyst of their highly anticipated iPhone release the following day, where they're going to be releasing the specs of their new iPhones that are going to be the first ones with 5G capabilities. So here's Apple on the 5-minute chart. You can see we've been consolidating through time in this tight range the previous week, while some other tech names have been going down. And then this large gap up over the consolidation range happened when we're coming into the trading day on Monday.
Hey, Houston, the pink line, is that just there coincidentally, or does it mean something?
This is VWAP. We can see this on the 1-minute chart going into the day. The previous day, Apple had held up pretty strong. It was never able to trade beneath VWAP for more than a minute. And that was on Friday. We gap up in the after hours. And then as soon as we open up pre-market Monday morning, this thing is bought up very aggressively and doesn't really pull in that much.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window. So don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So this 119.80-ish, 120 level is very strong pre-market support. So trading plan. I am very interested getting long this stock, but I do not want to just buy it blindly on the open or above its pre-market high, because in a stock that doesn't have an independent news catalyst today, that can be asking for being filled at poor prices. So I'm looking more so to buy flush into pre-market support once we show that the selling has really stopped, and risking the low day, then adding once I have confirmation that this is strong relative to the overall market, and adding above where we open from and scale out into strength. This is the ideal trading setup that I would like to see, and this is exactly what ends up happening.
So sometimes we call this the game plan. Before the open, Steve Spencer comes up with a game plan for everybody who watches his AM meeting through our educational company, SMB Training. And he'll put in specific ideas like this. If we pull into this particular support area, that's a long signal. If we hit this resistance area, that's a short signal. If we get above this particular resistance area, it's a buy signal. And he'll put in his game plan. We develop an SME game plan for the desk. And then I like what you're doing here, which is you're creating your individual game plan. And as you get more experience, you will develop an individual game plan. And what I like you doing here is being specific about where you want to buy it, the setup that makes sense for you, so that, and this happens a lot, particularly with developing traders, is the market opens and they don't have specific enough ideas for what they want to trade, what is best for them, and they get confused. And then they overtrade. And then they get FOMO. And then they wonder why they overtraded. And then they wonder why they underperformed. And then they wonder why they missed certain trades. And then they're frustrated. And then they wonder why they're frustrated. Well, there's certain techniques that conscientious traders like yourself are doing, so that, because there's lots of trades you could make in Apple on this day, right?
Absolutely.
And you probably could spot intellectually lots of other trades that you could make, meaning like you could push the buttons and actually physically make them, right?
Correct.
But I think when people talk about being disciplined, when people talk about finding their niche and trading their niche, that means thinking about, look, I know this stock's going to be in play. The whole world has been waiting for this day, right? This is an idea that's been teed up for a while. But you want to feel comfortable in a setup that's best for you, for your trading business. And doing what you're doing here, game planning, an idea like this, is the types of things that you do. And so, yeah, that's excellent there.
Thank you. Yeah. So, we do have a stock that's been strong relative to the market, whereas previously it was beaten up, and the whole tech sector is showing a lot of strength pre-market. This has a potentially massively positive news catalyst the following day. This is something where there's a lot of different ways you could trade it, and one of them would be to just buy it at 121 over the pre-market high here. That's just not my style, or for something I'd like to ideally see. So that's the trading plan, and now we'll go through the trading execution. So here's the 1 minute chart for about the first hour and a half of the day. And we do see this flush right on the open, where we dip under that pre-market support that we had drawn, and we hold there for a minute and rip right back through it. This was doing a lot of relative volume, 13.5, which all of us look for R vol as a key factor in many of the trades we take. But in a market vehicle trade in a stock like Apple, 13.5 RVol is absolutely massive. You know, it's not uncommon to see that in a stock that doesn't trade as much volume. But in one of the most liquid stocks in the market, 13.5 RVol is absolutely insane. So that got me very excited about the trade, or rather have more confirmation when it's working in my favor. I put on my first lot as planned when we go underneath that pre-market support and run right back through it, risking the low a day, then double the position when the price goes through opening price and showing relative strength to its index, the Qs. At this point, it is ripping up higher. We're seeing a volume expansion. Our vol at this point is still, I think, 11 or 12, which on Apple is something you very, very rarely see. And you can see why, because we actually become quite overextended here, and I'm scaling out in 20% lots when the move is much steeper than I originally anticipated. You know, ideally, I would have liked to see this grind up a little slower so that I could hold on longer. But when we get so extended, it was pretty hard for me to justify not taking profits.
I'm seeing something really specific about this particular setup, and it has to do with the dip. So oftentimes we talk about the dip and the rip, or the dip into a previous support area and then hopefully the rip to the upside. And so one of the things that I know you, as somebody who can backtest very, very well, and one of your strengths is looking at things systematically, one of the things that I encourage you to do is look at the volume and look at the increase in volume right on the open into that support area, and then look at how steep the move is into that support area. And if you can get steepness in price and you can get elevation in volume into support areas, that is a very distinct setup as opposed to lots of other ways you can get to those prices. And I would suggest that you particularly would make more sense of an elevated volume move and a steep price move into a technical support area than most. And you could develop edge better than many more about that particular type of opportunity. And then the add. Then the hold higher and add. That information can give you a signal that you can do with better than other people. You know, you may backtest and find a lot of edge in that. And if you do, then you're going to be more likely to buy into that support area, you're going to be more likely to add, and you should be, particularly given your skills, your strengths, your ability, I would encourage you to be thinking about whether or not you can do that. You know, can you take your discretion, add on a layer of backtest that gives you a signal, that gives you more confidence to buy and add in this particular setup?
Absolutely, and I'm glad you mentioned that, because this is something I'm already doing right now, partially because of this trade that we're talking about. This is a pattern that a couple of traders have noticed on a discretionary basis, but nobody's done a lot of quantitative work to see where the edge in that trade is specifically. So I'm looking to create backtests that will better inform my discretionary trading decisions.
100%. That's terrific. Keep doing that. Love it. Well done. Spot on.
What I don't show in this chart for Apple on this particular day is that this is at about 1050. Apple does not tick down for pretty much the rest of the day. So as proud as I was up here at how I managed the trade and how good I felt about its execution down here when I was all out, I really should have stayed with this trade if I knew that this was really going to be strong, and that it had shown me so much strength on the open, this is something that can trend all day. Of course, that's a separate trade, but it's something 100% to keep in mind.
If we get to a regime where volatility comes in a little bit, it's going to be more and more important for you to be able to see that trade, which you did, and then be able to stay in that trade, which you're working on.
Absolutely.
With volatility up, probably doesn't matter. You're probably going to make a lot of money doing a lot of different things. But we're not going to stay in an elevated VIX environment for the rest of your trading career and the rest of our trading careers. It will change. And when it changes, you're pointing to something that really is going to be necessary and really helpful for your trading.
So now the trade in review. The highlights were I had a solid trading plan, and I stuck to it once that trade materialized. And I was flexible on my exits. I initially planned for a much longer time frame trade, but when price became so overextended, the nature of the trade had changed. And I had to be flexible there. What I could do better is be more aggressive when volume and price are confirming my trade thesis. So price crossing through that opening range on the highest volume done in the tech market that day, and getting back into the trade later on in the day when the trend continues much farther. So there were multiple ways to make money in Apple on Monday, and I highlighted one of them in this playbook, but there were so many that I saw in real time as well.
Hey, go ahead and click our subscribe button so you don't miss any of the videos they're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.